Pete, I think it's a temporary worry, and the stock market could sell off a little bit because of it. Um, in many ways, what's happening is because the economic recovery and the vaccination programs definitely here and increasingly in America and Europe, the expectation is there's going to be a lot more economic growth than was initially expected. And I know I talked to Diana Messina from AMP Capital only last week, and she surprised me when she said that they had America growing at 6% this year. That's huge. And she said we aren't at the higher end of expectations. So this is why the bond market has taken off and interest rates have started to rise for the 10-year bonds. Now, because it's 10-year bonds, it shouldn't really have a short-term or even medium-term effect on the stock market. Only when we start seeing big inflation numbers coming through and interest rates really rising in banks and whatever, should there be any sort of permanent worry. But I think the market gets spooked when these sort of turning points happen, and that's what's happening. There's a turning point in the market.
Well, okay, just more locally as well, looking at the cost of real estate at the moment, particularly in capital cities, Pete, they're just absolutely going bananas at the moment. There's a lot of talk about whether there may well be an interest rate rise earlier than expected. The RBA had said there's probably not going to be one until, 2023, 2024. But given the rapid rate of recovery, is there a chance that it could well happen, perhaps at some point over the next 12 to 18 months?
18 months more likely than 12. Whenever the Reserve Bank governor said that interest rates would remain where they were for 3 years, I tried to say in the nicest possible way, baloney, but I don't know how you can actually do that. Now, the only reason I did that is this. I just thought both what the government's doing and what the Reserve Bank's doing was going to be great for economic growth. And you know how optimistic I've been about the outlook for the Australian economy. Now, when you have that really strong optimistic view, you then have to factor in eventually wages rise, inflation rises, and therefore the Reserve Bank is going to be forced to raise interest rates. I kind of gambled that we might get 2 years rather than 3. And the bottom line is this: even if the Reserve Bank had to admit he was wrong, it's a good thing to admit to. I did such a good job. I did better than I expected. And the economy. And so that's what I think treasurers and Reserve Bank governors will always do. They'll err on the side of caution to try and stimulate people to go and act. But the bottom line is if inflation takes off, they will have to raise interest rates. And I think 2 years is probably more likely than 3.
Okay. And just some economic news that you're looking forward to this week, Pete?
Mate, this is an economist's dream, mate. We've got home prices today and business indicators and job ads. Fantastic. That's Monday. Tuesday, the Reserve Bank makes a decision. Won't raise interest rates, of course. Wednesday, national accounts, economic growth. How fast are we growing? 2.6% in December quarter is the guess. Good number, because to work out the annual figure, you add the quarters together, so 2.6 is a big number for a quarter. Retail numbers Thursday, international trade numbers on Friday, and then US job numbers on Friday night. Fantastic. Okay. Mate. Great week for economists.